Hello traders, Nick Shane here looking at Canopy Growth. CGC is the ticker, pot company, cannabis company, whatever you want to call it. Those are the stocks that came out of the gate and really, not came out of the gate, really had their day has passed. They were rallying. They're still overvalued. If you think they hit a bottom, I think you're mistaken because they're still selling over 100 times sales, probably most of them, if not all of them. All right, so CGC is the cream of the crop. Markets are open. I have two eyes on it, one eye on it. So because of its perceived balance sheet. If I did the math correctly, their balance sheet is committed. So I'm not sure what people are talking about when they say it's got a pristine balance sheet. I thought they did some funky deal and they blew the whole $4 billion or whatever they got from STZ. So nevertheless, the chart has information. So let's treat it, assuming that the management's still doing whatever everybody believes they're doing the right things. So I'm going to assume that. Assuming also that it is a young sector. The industry is illegal in the U.S. federally. So kind of a tricky situation. So they are swimming upstream, and for that, I commend them for what they've done. I'm agnostic. I don't have any trades in that. I have traded it from the long side before successfully, and I just haven't traded in a while. But I can read the chart. So the assumption is that fundamentally it's not an issue. Financially, it's not an issue because of what they have on the balance sheet. So I look at the charts. That's the only thing to look at as far as variable. It is also important to note that the recent news about vaping is definitely negatively impacting that, because I live in California, so pot is legal, and I see a lot of people walking around with pens. So they're vaping cannabis, and it just goes hand in hand. So this is CGC 2-hour candles, so every candle is 2 hours, so it's a 2-hour chart. It had opportunity, it peaked above it, but fizzled. So people could have started chasing it because it should have covered the gap, but this was on earnings. So usually the gaps on earnings, they have a reason for it, and those tend to be tricky. Unless the reason was wrong, like if somebody misread the earnings or misinterpreted the earnings, then this would be easy. But headline or not, the breakout failed. So is it a buy here? It's not an easy answer, but it's better than 2 days ago. So it's back to a proven support until it's not, right? So I can assume that this is a support level because it has been pivotal here, here. This was a ledge. They took it back. Onus is on the bulls to own it from there on up. So, and they did. So onus is on the bulls again to prove it that this wasn't a fluke. This wasn't a fluke. So this is the pivot point. So if I draw a line here, it's the pivot point for this period of time. So it's not a long time. It's just, let's say 20 days. I'm eyeballing. So regardless, it is an important level for the short term. So the bulls can still retain it, meaning they'll meander higher and they'll have a second chance at attacking this neckline. So in that case, I'll just move this one a little bit higher and I'll be fine. And then try to chase it to close that gap. I don't think this is enough information. I need at least double the time frame. That's still not enough information. I'm going to go to a daily chart. This is what most people look at. So this is a 1-year daily chart, about 1 year. And you can see how that same level we were talking about. And if I look left, that level is even more important than I just thought, because look at what happened here. This was the December crash. This is the Christmas crash. Yes. Anyway, I just made a call on the VIX and it worked out fine. So it is even more important. Why? It's the accident scene from here and the accident scene from Christmas, the end of the accident scene. And look what ensued. I'm not saying this is going to happen now. I'm just saying that this is an important point. And this was a target of mine on the loss of this level. So it is meaningful from what is it now? 3 different time frames. Let's call them 2. The short-term time frame and the long time frame. Okay? Let me see if I can get anything from 5-minute charts. No. Just a descending wedge. So I bet that this is not the end of it. I'm going to go to a weekly chart and zoom in. So this is 5 years worth of information. I just zoomed in out of 2 of them. So let's say 3 years worth of information. Okay, so a ton of information here, and let me share it with you, okay? Okay, so I'm going to mark it up and bring a scratch pad. This is the best way I see. So now we're looking at 1 candle per 1 week. Okay, so this was last week. This is this week unfolding with 1 more day to go. This is 2 weeks ago. 2 weeks ago, it showed promise. This is the same yellow line I just said, and this is where it failed the first time. And here it is back to that little point right there. Okay, so I'm going to go to a smaller pen, and this is the point I'm going to point at it here, right there. Okay, so clearly it's an important point in time. There it is again. If I look left, there it is again. Okay, so it keeps coming back. So this one right here, look at this. This is pretty darn close. So it keeps coming back. Look at this. It keeps coming back. And this. So clearly this is a long-term pivot point. So those are usually sensitive, and whoever fights it there, they remembered what happened and they want to fight it over again. They don't usually let it go, and that's why on the way down it should be support. On the way up it should be resistance. Now in this case, according to this weekly chart, I would guess that they want to go back up to here because this was the value area. If I'm looking at the volume profile, unless my chart is off, and it could be off. In fact, let me go reset it just to make sure before I misspeak here. I'm going to go to 1. You know, TradingView is great, but for some reason it doesn't have a reset to like default. So I have to go through all of this. I hit the 1 year, 5 years. Okay, no, I'm right. Okay, so according to, if I'm zooming in through this period of time, the volume profile tells me, what is that? It's basically where the fighting has happened between buyers and sellers. And it tells me that it's this zone right here. And the hardest was up here. So you've heard point of control. This is where it is. Value area, high and low. That's the value area. So anything outside of the value area should be not usual. So they want to get back into it. So, but after a dip like this for weeks on end, it's hard to just buy and hold and buy and hope. Now, that's the bad news, but there's good news. It has done it before, and it's about the same length, if not even longer. But also, step 1 of stopping a slide is to actually base. And in this case, they have based. They haven't had a lower low. They have a descending line, like if I extend that blue line of lower highs, lower lows, lower highs, and then suddenly now there's ascending lows and lower highs. So we have this coming down, and if this continues, if they hold this zone like this one, and they continue up, there's going to be higher lows, lower highs, and they're going to come to a point, and then they're going to fight it out, and something's going to happen. So if they break out, they will have a snapback rally. That's my guess. And it could be part of a lower low eventually. Like if they come down here and they have a snapback rally, they can still do this and an ABC move down to much lower lows. But then I would have ridden it up. This is a trading idea, not a recommendation, not a forecast. I watch and I would chase. So what I want to see is a breakout. I'm going to extend this. This is not a scientific line, right? So, and it would unfold in several ways. So I want to see them break and close above my trigger line, depending on the time frame I want to play it, and then ride it up. So important lines would be 31 and change because of this line right here. So that would be where I would exit, book some, lock some, whatever, or expect a dip. So they might do this, and then go back up. This would be another place, 34.7 to 34.8. It's a moving target. So if the bulls can get up to it, then they take the reins. Right now the sellers have the reins. But if they can then all the technicians will come out and say, oh, the moving average this and moving average that now are pointing up, or that we've moved above them and they're not resistance anymore. Doesn't matter. To me, I work with levels. So 30.7, 30.8 is significant, 33.4, 34.5. It's a zone because we're looking at a weekly chart. If you want to get pretty scientific, you'll have to delve into shorter time frames. But the weekly gives clarity. So the one clarity is that 32, let's call it 33, round number, is a place I would book, because if I'm lucky enough to catch that. So how do I play it? I buy stock, I buy calls or call spreads, I sell puts or put spreads. But anything I do, I have to know what I'm doing, and I have to be accepting of a loss. These are wild, 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 wild. So Canopy growth, let me show you how wild this bad boy is. So first of all, they lose $4.50 earnings per share. And they're selling at 60 times sales. Well, that's unusual because I've seen some extravagant numbers. Maybe they dialed up their top line. So this is Kronos. I'm not saying 60 times is cheap. This is 300 times sales. So maybe that's why people like CGC, fundamentally speaking. Can't think of any other company right now. Oh well. So these are, ACB. Aurora Cannabis, which I think has a decent chart usually. I haven't looked at it in a while. So what does this one sell at? What? Price to sales 28, 29? I'm not trusting these numbers. But anyway, maybe they made some improvements. Maybe that's why Kronos is falling off a cliff. So the opportunity here is failed, but down but not out. So we shall see what happens there. If you have any questions, let me know.